Right now, the market is scared. Like, actually scared. But here's the real question. Is this the beginning of a bigger move down? Or is this exactly where short-term opportunities start showing up? Because just a few days ago, the market did something almost too clean, and almost nobody noticed why. Last week, I talked about something very specific. Two massive put wars on SPY. One at 660 and another one at 645. Each with around 190,000 open contracts. And what I said was simple. Once 660 breaks, the move down could get fast. So what actually happened? Right after the Fed rate decision, the market started rolling over. And within just 2 days, SPY dropped from 668 straight down to 645, literally tagging the next put wall. And then, immediate bounce, back to 653 in after hours. No hesitation. And this is the part most people miss. That move was not random. Those put walls act like magnets. When you've got that kind of open interest, price gets pulled into those levels, especially doing something like quadruple witching. Basically, the market wasn't being emotional. It was being mechanical. Yeah, I know. Not as exciting as panic selling. More useful if you're actually trading. But here's where it gets interesting. That whole structure, it's gone now. We just went through expiration. Millions of contracts cleared out. So all those levels everyone was watching, irrelevant. Clean slate. So now the only question is, where is the smart money positioning next? Alright, so let's start with the very short term going into Monday's session. SPY closed Friday around 648.5, and we actually pushed higher in after hours, up to around 653. Now here's what's interesting. When we look at Monday's expiration, there's almost no put support underneath. But on the upside, there's a small call wall sitting around 660. So what does that tell me? There's really not a lot holding price down here, which means a push higher, especially early in the week, is very possible. Basically, a bit of a relief after the selling we just saw. The market just fell pretty hard. It's allowed to breathe a little. But now, zooming out to the weekly expiration on Friday, this is where things get interesting. Because we're seeing two familiar levels show up again. A put wall at 660 and another one down at 645. Both sitting at around 65,000 open contracts. Now, if those levels sound familiar, they should. So here's how I'm looking at this. Yes, we could get that early week push higher, maybe even a move towards 660. But structurally, this still looks like a market that wants to retest the lows. In other words, that bounce might just be a short-term move before we rotate back and test that 645 level again. Now again, this is not about predicting. If price pushes up and hold above 660, that changes everything. But if we start rejecting that area, then a move back down towards 645 becomes very realistic. Most people are going to look at the bounce and think the move is over. But if you're watching the options, you know the story might not be finished yet. If you're wondering how to actually read this yourself, I'm always looking at three things. Where open interest is building, whether implied volatility is expanding, and if there's any unusual flow coming in. If you get two out of three, that's not noise anymore. That's something you pay attention to. Alright, let's start with the stock for the bearish scenario. First name I'm watching is Micron, ticker MU. But this one is interesting because fundamentally, they actually had good earnings last week. But here's the thing. In a market where uncertainty is starting to creep back in, even the good news stocks start getting trimmed. Micron already had a massive run. So what we might be seeing now is just some of that excess getting cut off the top. Basically, Wall Street putting MU on a diet. And when I look at the options for next week, one level stands out very clearly. There's a major put wall sitting at 380 with around 14,000 open contracts. And it's not just another level. It's dominating everything else on the board. So putting this together, after the selling pressure we saw last week, This starts to look like a setup where price could get pulled lower and potentially make a move toward that 380 area. Now again, nothing is guaranteed. If MU stabilizes and holds up here, this can always change. But as long as the pressure stays on, the 380 level is definitely on the table. This is exactly where most people get confused. They see good earnings and expect price to go up. But the options don't care about headlines. They care about positioning. So switching over to the bullish side, one name I'm watching is JP Morgan, ticker JPM. Right now the stock is trading around 286. And technically, it's sitting right on that 38.2 Fibonacci support. So from a pure price action perspective, this is actually pretty clean area to react from. But what makes this more interesting is what we're seeing in the options market. For the weekly expiration, there's a call wall sitting up at 300 and puts down at 265. Now, yes, that 265 level exists, but it's relatively far from current price. So in the short term, the path of least resistance is actually higher. So if the market does get that bounce early in the week, JPM is one of those names that could easily push toward that 300 level. And let's be honest, if banks start moving, the market usually isn't in a panic mode. Of course, if the market rolls over again, this setup doesn't matter. But as long as we're holding this support, and especially if we see strength coming in, this becomes a very clean short-term bullish setup. This is what I like to look for. Alignment between technical support and options positioning. That's where things tend to get interesting. Another name I'm watching, this one a bit more patient, is Reddit, ticker RDDT. Right now it's trading around 139, basically sitting right under that 140 level. Now if you look at the weekly expiration, there's actually not a lot of bullish confirmation here. What we do see is put support building around 140 and another level down at 133. So in the very short term, this isn't screaming breakout. This is more of a hold and stabilize type of setup. But when you zoom out a bit and look at the monthly expiration in April, that's where things start to look a lot more interesting. We're seeing core walls building at 160 and even higher at 200 and 220. So what does that tell me? If the market starts to stabilize from here, Reddit becomes a really strong candidate, not necessarily for next week, but for a potential move over the coming weeks. Basically, this is not a buy it Monday morning setup. This is more like keep it on your radar before it wakes up. As long as price holds around this 140 area, and we don't lose that 133 level, this starts to build a base for a possible move higher. This is why I always look at multiple expirations, because sometimes the real move isn't in the weekly. It's already being positioned further out. Right, last one on the list, back to the bearish side, is Broadcom, ticker AVGO. Right now it's trading around 310. But when you look at the options for next week, the structure here is pretty clear. We're seeing a layered set of put walls building below price. 300, 295, and then 287.5. And that 287.5, that's the big one. Around 17,500 open contracts, the largest concentration on the board. So this isn't just one level. This is a path, a step-by-step structure guiding price lower. Meaning, as we start moving down, each level becomes less of a floor and more of a checkpoint. Not exactly the kind of stairs you want to be walking down. So if AVGO starts pushing toward 300, and especially if we break through 295, that's where things get speed up. Because at that point, there's a pretty clean path toward that 287.5 level. Now, of course, if the stock holds above 300 and the market stabilizes, this setup can pause. But as long as pressure builds on the downside, this structure is clearly pointing lower. This is something I pay a lot of attention to. When puts aren't just concentrated, but stacked like this, it usually means the move isn't random. It's being built. Alright, so that's the watch list for this week. Some names setting up for a bounce, others already showing pressure building underneath. Which means this is not a one direction market right now. This is a pick your spots carefully environment. Because at the end of the day, the market rewards patience. Remember, the second mouse gets the cheese. Don't be the first mouse to get caught in the trap. Positioning first, price second. And by the way, once we hit 1000 subscribers, I'm going to start doing live trading sessions here on the channel. So if you want to see how this actually plays out in real time, you might want to be around for that. Until then, this is Roy, wishing you all a green trading week.